A brutal week for Bitcoin.
Crypto markets have seen some big dips over the last few weeks, and while there are reasons to be bullish,
Hello folks, welcome back to our channel. Hope you guys are doing great. Today we are going to talk about, is crypto crash over or just the beginning? Without wasting your precious time, let's get started. Bitcoin setting the pace. Financial backers should look no farther than the fundamental crypto Bitcoin, which seems to have accomplished some steadiness more than $35,000 lately. That being said, BTC's best courses of action will be pivotal. Since the cost of BTC dipped under 40k, in mid-May, the cost of the resource has fluctuated between $32,000 and $38,000 territory. In doing so, BTC has never fully figured out how to assemble sufficient help to recover the $40,000. Investigators are highlighting a vital degree of help at $35,000, which on the off chance that it keeps on building, could bring about a significant and supported development towards $40,000 or more. Of note, this move would not be so siphoned on influence. In any case, value activity as of late has been exceptionally uneven. On the other side, BTC could enter another time of value revelation on the lower end. Put another way, there are further developed arrangements and better serving coins out there, contrasted with BTC actually too, with Ethereum being an ideal model. Eventually, no one truly understands what the following move with BTC with the current value activity working out with hazard assessment proceeding to be a factor. Unpredictability is constantly expected in crypto for any new arising innovation or resource class. It is essential to likewise focus on the selection pace of the organizations. For instance, if the members in the organization continue to develop over the long haul, the worth of the organization arises. This could be a vital factor for some other cryptos publishing ahead in the short and long haul. By this measurement, BTC and cryptos have the quickest developing appropriation pace of any innovation lately. BTC selection has been nearly higher than the pace of appropriation of the web. From a financial viewpoint, BTC or other cryptos are likewise a characteristic support against at no other time seen development of US dollars cash supply. Many have seen BTC supplant gold as far as expansion fence, with establishments purchasing BTC at rates never higher than at any other time. This could address a tailwind that addresses a long-haul bullishness on BTC. However, it's too soon to tell. Clearly, a proceeding with course of business, as usual by the US Federal Reserve, would likewise have to hold consistent for this pattern to proceed. Lock in for more volatility. Crypto's value unpredictability is something most financial backers have recently come to acknowledge. In the event that there are no times of sharp drops of 20 to 50% more than a few days, there can be no times of quick development of 100 to 200% throughout a brief time frame too. There are regularly sharp developments that make crypto resources appealing for retail financial backers, who will in general face high challenges in quest for high benefits. Notwithstanding the on-off chance that you eliminate the danger, crypto will get practically identical to different resources, for example, metals or the other conventional resources exchanging on the world's biggest trades. It is disputable whether BTC won't generally be prepared to do such limit instability. For instance, huge drops will at this point don't be conceivable when the capitalization of BTC is enormous to such an extent that retail deals won't influence the conversion scale. Looking forward, it is impossible to say where crypto costs are going. Notwithstanding, given its previous exhibition, we could undoubtedly see BTC or other cryptos arriving to get away from speed sooner rather later if hazard hunger holds. In the last 60 to 90 days alone, there's not been a ton of positive activity in the market, which could highlight more exorbitant costs. With the late spring months verifiably addressing a break for markets, it will be intriguing to perceive how crypto acts during this period. Part of Ethereum. The concentrate of the late has kept on moving towards Ethereum, and there is a lot of consideration on the decentralized money, DeFi, biological system that sits on top of it. In any case, both ETH and DeFi resources in all cases are vigorously reliant upon the cost of BTC. By and by, there is an unpreventable relationship to BTC costs and the more extensive altcoin and DeFi market. However, this is one that could debilitate after some time. Financial backers who have bounced on board the most recent Bitcoin value rally have taken in the most difficult way possible exactly how severe putting resources into cryptocurrencies can be. Bitcoin traveled to an untouched high of nearly $65,000 in April, however slammed underneath $32,000 on May 23rd, losing the greater part of its worth from the pinnacle. Up until now, so has Bitcoin. The cryptocurrency has been amazingly unpredictable for the last 10 years, with speedy fire gains and misfortunes all piece of the good times. However, this will come as a stun for later financial backers, who have not seen an accident in the previous year. Stéphane Yollet, CEO and fellow benefactor of FRNT Financial, considered it the main welcome to crypto day and said beginners should be advised to become acclimated to it. The historical backdrops of these resources has been covered with forceful energies and nauseating sell-offs. Bitcoins and other cryptocurrencies presently face two existential dangers, and financial backers need to understand what they are. In the first place, it is the fault of Elon Musk, the crypto fan kid, chronic tweeter, and Tesla author set off the accident by turning around his February choice to acknowledge Bitcoin as installment for his organization's electric vehicles, calling its energy use crazy. Tesla and Bitcoin were consistently a weird fit, given that the electric vehicle creator is at the bleeding edge of the perfect energy upset. While Bitcoin diggers are fueled by coal and burning through more force than Finland, the subsequent trigger was an administrative clampdown started by the People's Bank of China, which has restricted banks and online installment channels from offering clients crypto administrations in spite of the fact that individuals can in any case hold them. China's monetary controller desires to check theoretical exchange, keep up capital controls, and urge its populace to accept computerized yuan. These dangers please stop off recently referred to perils like limit value unpredictability, absence of administrative assurance, the danger from programmers, and the way that no one has worked out what cryptos are really for. So how frightened should financial backers be? Mr. Musk has said that Tesla will acknowledge Bitcoin once more whenever it's gotten it together. Yet that will be not simple. Reasonable Bitcoin is far off. In spite of the fact that rival cryptos, for example, Ethereum, Cardano, Ripple, and Stellar utilize less energy. The Tesla inversion may frighten away other corporates as they are as of now facing expanding pressure from investors to meet ecological and social administration (ESG) standards, and working with crypto exchanges will neutralize that. The tide has changed, says Lyeth Khalaf, monetary examiner and speculations at AJ Bell. Customers and financial backers may stay away, Mr. Khalaf says. Beijing's hardline position resembles the beginning of a deliberate exertion to restrict the decentralized force of cryptocurrencies, Susanna Streeter, senior venture and markets director at Hargreaves Lansdowne says. The greater Bitcoin gets, the harder the controllers will become. Joshua Mahoney, senior market examiner at Online Stage IG says, with foundations playing a bigger part in this most recent bull run, the repercussions of another all-encompassing crypto catapultation could be more far-reaching contrasted in 2018. Mr. Mahoney said, modest cash and low loan costs will keep on driving interest, he says, and notes that the new drop brought out a large number of purchasers than vendors. Financial backers should hope to lessen hazards by putting away their cash across various resource classes and stay away from unreasonable value development assumptions, Mr. Kirbat says. In any case, cryptos utilize progress and imaginative innovative that could be tradable with better guidelines, and not simply stay away from as administrative bodies do now. Computerized resources were overbought and stay helpless against fast changes in slant, yet they actually have a future. Ernst Nake, head of exploration at Chart Capital, says. The critical adjustment may be a chance for long-haul financial backers looking for openness, Mr. Nake adds. Don't simply take a visually impaired fund, however. Consider specialized markers, for example, opposition levels or moving midpoints, and examine the various advances to comprehend their fundamental organization utilities, Mr. Nake says. The crypto market has had a forgettable past month, with Bitcoin falling almost half in May alone. In general, this features for some the worries that have constantly characterized the resource class, that is, unpredictability, thus numerous anticipated factors. Obviously, such moves in the crypto market are the same old thing, particularly for financial backers who have conquered the components of the 2017 run-up and ensuing accident. A seriously squeezing question in the short term is whether the last month's accident is a brief build or indications of a more profound disquietude. So that's it in support of this video. We trust this video is enlightening for you. Hope you like our video. Still hungry for knowledge? Please subscribe to our channel so that we can help you enhance your knowledge. As we know, sharing is caring. Please share this video with your friends. See you all in the following video. Till then, be careful and sound.